Hi, everyone. It's Sean with Paycheck, the portfolio. Hope you're having a good Friday night. Wanted to talk about this is how I borrow money to make more money and how I basically arbitrage my own W 2 income, just like the bank does. Every time your deposit goes into the bank, they don't keep that money in a vault. They're lending it out to other people at 6, 7, 8, 9% interest, and they're paying you a fractional percentage of interest on your own money. So we're just becoming our own banks in this system. If you're new to my channel, all of my W 2 income rolls into the brokerage account. I don't live out of a traditional banking account. I buy long term growth stocks with that or dividend paying assets. And then essentially, I borrow from those assets to bridge my expenses that my dividends don't pay. And over time, that's going to snowball to cover all of my living expenses, which I'm going to talk about in detail tonight. First, I wanted to give a quick portfolio update. You can see that the net account value is $128,664 there. My total unrealized gains is sitting at $35,491 or 15.42%. And another good day in the market, we were up another $505 today. Looking at performance, my 1 year performance, I'm sitting at 54.31 cumulative performance. So what that means is that's growth and dividends that I have received. You can see the S&P 500's at 13%, the Nasdaq's at 12, the Dow's at 14, and the Russell's at 11. If you look at my 2 year, I'm sitting at 67%. You can see the other indexes there. I won't read each one of them just for the sake of time. The 3 year, you can see I'm getting close to 100% cumulative return versus the other indexes. And it's been good across the board, but it's still outcompeting the indexes there. So let's go to the balances tab here. I want to explain this to you, and I'm going to move fairly quickly. I try to keep these videos about 10 minutes. Going to go line by line. You can see my net account value is what we just discussed, $128,664 there. My gross portfolio value is currently sitting at $250,480. You can see my margin right here is sitting at $121,815. You can see on the prior close as of yesterday, Thursday, it was $126,174. So what happened between Thursday and Friday is my paycheck rolled in here, 7/11. It will release on Wednesday next week, and immediately it will be applied to my available for withdrawal, which is right here. So that $5,100 will immediately get applied to the $6,322. And you can see my margin equity percentage has already taken this into account. So I'm sitting at 52.46%. And I have dividends hitting tonight that will increase that percentage even further. So if you're new to my channel, all of my W 2 income rolls into the brokerage account. I don't live out of a traditional banking account. I buy growth stocks or dividend producing assets with that. And then I bridge my expenses with margin. And what's going to happen is over time, my dividends will snowball and cover all of my living expenses, which will allow me to live a FIRE lifestyle, which stands for financially independent, retire early. So I want to look at a few things tonight. Always try to break this down in simple ways for you. So I want to give a simple example. So imagine you borrow $10,000 at 8.44% interest. 8.44% interest is my E-Trade interest rate. I've negotiated it down multiple times. You can too with your brokerage. In that case, your annual interest cost would be $844. You invest $10,000 into an asset yielding or assets yielding 30% blended rates. So in that case, you would earn $3,000 a year in dividends. So the net outcome in year one, you would receive $3,000 worth of dividends. The interest paid would be $844. Therefore, your net profit or cash flow would be $2,156. That's the same thing a business does by going and getting an SBA loan or a capital investment. They would invest in cash flow producing activities. And that's how a business would make money and obviously grow from that point forward. So all we're doing is acting as our own bank. Again, when you deposit money into the bank, they're not keeping that money in a vault. They're lending it out to other people, and they're making money off of your money and then paying you a fractional percentage that really equates to nothing. So in this case, we're taking our own W-2 income that we would spend on groceries, mortgages, Starbucks, whatever you want to put out there, right? And instead of spending the zero, we're buying assets that we own and that pay us back and will compound over time. So using a real life example, let's say we had a portfolio that we had $10,000 invested in. We had an annual income of $50,000 fully invested instead of investing the leftovers. Let's say that we have a blended yield of 30% that we take as cash from dividend paying stocks and we don't drip those. And let's say that those assets grow at 7% capital appreciation, which is the average of the stock market. Let's say the margin interest rate is 8.44% annually, and that living expenses are $40,000 a year. I realize these are low numbers. I'm just trying to use easy math. Dividends will be used for margin interest plus expenses, and then we'll use margin to cover those living costs. So let me just say that again. Dividends will be used for margin interest and expenses, and then margin will be used to bridge, like I do, to cover living costs. So if you go to this monthly review, this goes to 60 months. Your portfolio value would start out at $10,000. You would have your W-2 contributions. You would have your dividends that would equate to 30% over the course of 12 months. You would have the growth of 7% annually. Your portfolio end would be this number here. Your living expenses would take into account a 4% inflation number. So the first month you would have zero interest, and you would bridge the margin with $3,000. So obviously you would have your dividends of $250. You would have your living expenses of $3,333. You would immediately knock that down by $250 with your dividend income, which would mean that you would bridge $3,083 with those funds. And if you scroll down every month, what's going to happen is compounding. Okay. And over time, you're going to see right here at month 35 that margin is no longer having to be used at that point. Okay. What that means is the dividends have started to outpace the expenses. And then at that point, what will happen is the margin utilization will start to be paid down here. So after 60 months, when you look at this, a $10,000 portfolio with all of your money invested now becomes $306,525. And the margin is being paid down. And you can see that that's essentially how this works, right? So you can see portfolio start, portfolio end, margin used. If you follow it down, let's just go column F here. So your portfolio end balance would basically be $312,000. Now, the truth is I'm just going to use the margin to buy more cash flow because I can arbitrage my W-2 income, and then I can arbitrage a loan as well, just like a business would. What I'm trying to teach is to have a mindset like your personal finances are a business and not just something to save and to spend. If you go to our Discord page, we have a lot of tools here. So we have a Fire Calculator Pro model. I'm going to show you that as well because these are my actual numbers. So I basically took my balances here. If we go back here, I took my gross portfolio value, my net portfolio value, and for transparency's sake, my gross portfolio value is right here because this includes cash secured puts I've sold. Okay, so that 256 number is right here. I showed you my starting margin debt is right here, my W-2 contributions, my inflation, my annual living expenses. And when you look at the Fire Pro that we have on the Discord in the membership group, and I will post those resources in the comments and pin them for you. If you look at my gross portfolio, this is a pretty detailed spreadsheet. So again, it's very similar to what I just showed, except it has drip dividends, non-drip dividends, interest paid, cash after interest, monthly expenses, accounting for inflation, margin used, margin pay down, margin debt, W2 contributions, and then net account value. On this calculator, which is really neat, is when you get to zero here again, that's when you essentially are free from a 9 to 5 and you're living financially independent, retire early lifestyle. So you can see at month 36 is when my non-drip dividends will cover all of my living expenses. And after about 5 years, I'm sitting at about $1.4 million gross and $1.3 million net. Again, I'm going to not completely pay down my margin. I'm going to continue to use margin just to compound quicker and to invest more. And so some of the sample stocks I have in here, I talk about Cornerstone a lot. I talk about Goff. I talk about YieldMax, MSTY, QQQY, SPYI, QQQI, and NVIDIA. You can see some of these will vary depending on the price action of the stock. CLM and CRF are sitting about 18-19% dividends right now, but their drip at NAV is actually 19-20%. So all these calculations are pretty conservative, but when you average these up, it's about a 47% yield. And that's conservative. I'll often say 25 to 30% conservatively. The truth is it's quite a bit more than that. And then I have investment allocations here of 50% in the closed-end funds, 25% into covered call ETFs on the whole markets, and then 25% into stock-specific covered call ETFs. This is not meant to be a guide. This is meant to just show you the power of compounding with some simple, healthy growth stocks and dividend or covered call dividend ETFs. So again, I hope this has been helpful just so you can see the power of compounding your own money. If you need any help, please see the pinned comments. We have free resources that you can download. I have a monthly membership that you can be a part of, very active. You can set up one-on-one calls through there. You can set up one-on-one calls with myself if you'd like, or I'm offering a white glove shoulder-to-shoulder type of training if you're interested in that as well. And if you found this information helpful, please like and subscribe. And I hope you guys have a great weekend, and we'll talk to everybody soon. Bye.